Theo Trade. This is Don Kaufman. It's September 16th, 2019, and you are watching the Theo Trade evening video. There's about 7 minutes left inside of today's trading session. The S&Ps are down 10. Nevertheless, you kind of get the feeling there's a bit of a broader weakness in this marketplace that's being masked effectively by what's going on inside of the energy stocks. You know, kind of at first blush, I would believe that many traders, many investors, okay, they kind of think to themselves, wow, oil is up almost $7 a barrel, right? It's over 12% move to the upside. And they initially think to themselves, that's just gonna hammer away at markets. You know, the S&Ps, they did dip a little bit lower when they reopened on Sunday night, but they recovered nicely. And one of the reasons that they've recovered, listen, the energy stocks are flying right now. You know, as I said, the entire marketplace feels like it's being masked. Again, there's kind of a broader weakness kind of going on. And that is pretty self-explanatory when you look at the S&P 100. The advanced decline line out there is roughly 80-20. But this day is kind of marked by big market cap, ConocoPhillips, okay, or ExxonMobil. Again, some of these energy stocks, there's such huge market cap, and they're up 3.5%, that they're actually holding those S&Ps together. When I say holding the S&Ps together, well, okay, Don, you know, the S&Ps are down a little bit over here. Yeah, well, you do have the monsters of tech is down about, 0.8%. Okay, so some big tech names, specifically Amazon, it's getting hammered a little bit over here. I mean, Amazon's down almost to the tune of 2%. Meanwhile, at the exact same time that's going on, okay, I would be remiss not to mention the Russell. The Russell and the NASDAQ, once again, in this wild kind of convergence trade. People, you got to stop right there. There's a lot going on inside, okay, of this market. Okay, the cyclicality of it, if you will, sector rotations, it is really Mr. Toad's wild ride. And yet again, the S&Ps kind of feel like they're just brushing this off. As I said, though, it's kind of masking, if you will, a broader weakness. And most of that, you know, in today's trading session, for a moment, push aside what you see inside of oil. Listen, that trade, yeah, it's happened, okay? It's happened, and I don't want to say it's over and done with because there could absolutely be some follow through to what's going on in oil. But the remainder of this week, moving forward, it's not about, okay, masking broader weakness. It's all about, once again, the bond market, okay? The bond market today caught a little bit of a bid. Now, for those of you that don't necessarily speak Trader Geek, that means they're up. Okay, the bonds started to rally back. And you got to ask yourself, as a trader, as an investor, if you're involved in this business, will that bond bounce hold? Because if this bond bounce is going to hold, and if these bonds do start to take back off to the upside, okay, once again, it's night-night for the financials. If the financials, okay, start to turn, and again, when I say the financials are turning, if the financials start to come back down, maybe even something like 2650, it is over for the S&Ps in the near term. Again, we're kind of sitting right now on pins and needles watching the bonds. Clearly, okay, you have to respect what's about to occur on Tuesday of this week. We've got Bank of Japan. Okay, Wednesday, we've got the FOMC. On Thursday, it's Bank of England, the Swiss National Bank. Okay, and with that in mind, it's also critical that I pull up once again the probabilities of a rate cut, because just this weekend, in the weekend update, I was talking about a 76% chance of a rate cut. Well, check this out. Even with some of the negative news that we heard, okay, regarding the Saudi oil fields, recognize the probability right here, okay, of whether we're going to cut or not cut. Again, the probability of the not cutting has now jumped to 34%. Just the other day we were looking at this, it was what? Okay, 24%. So it has jumped quite substantially and may continue, okay, to rise in what? Tuesday, even early in Wednesday's trade. I mean, before we know it, we could be talking about a 50-50 probability whether we're going to get a rate cut or not. And you have to recognize, not getting a quarter point cut, the marketplace is not going to be happy about that. And you should think about these probabilities, pay attention to these probabilities. Something I talked about on the weekend video was I am in the minority on this, regardless of the probabilities. Okay? I just can't come up in my head with a good case for the Fed to turn, like, again, another 180 and say, yeah, you know what? We're going to cut another quarter point. Because just a few weeks ago at their last meeting, they specifically said that this is not the beginning, okay, of a larger rate cut, and that this was a mid-cycle adjustment. I'm going off of that last statement from Jerome Powell. Nevertheless, okay, the bonds are reacting right now. They are slightly bid up. In the midst of all of this, again, a lot of traders are so focused on what's going on inside of the oil markets, and yet they're missing, again, a couple of big trades I think that are underway. One of the first things I want to point out to you, and I was talking about the Russell versus the NASDAQ. Well, you know what? Not all of you guys are into pairs trades. Fine, push that aside for a second. Scroll to the bottom of the screen. Take a look once again at the VVIX. Now, I pointed this out, okay, on this weekend's update, and I'm pointing it out again because the markets are what? It's a mild sell-side activity. The S&Ps are right near their all-time high. And yet the volatility of the options in the VIX, it's bid. And what does this look like? You know, if you look at this thing over time, you can look back over like the last 3 years, you can see quite definitively how elevated we really are. Closing bell coming here momentarily. This is how elevated we really are. There's only a few instances of really trading above 100. Now, one of the unique areas is that, okay, in any of the recent VVIX, and that's the volatility of the VIX, right? You won't find it this high with the S&Ps just a stone's throw off their all-time highs. Now, of course, it's easy to push this aside and say, well, that's because the Fed is about to have an announcement. There's the closing bell. That's because the Fed's just about to have an announcement. Absolutely unequivocally, that is having some degree of impact over here. But the fact of the matter is it's not just the VIX of the VIX that's elevated. Clearly, we know that the bonds now, okay, are what? Are starting to rally back up. And that's why, again, these bonds are going to tell us a tremendous amount, even before the Fed comes out, about what this marketplace is likely to look like in the coming days. Another big area that I really want to stress to you, okay, happens to be some very specific positions that I've taken, okay, in recent weeks. One of them being the XLP. And again, I've got numbers of positions inside of the XLP over here. Nevertheless, the XLP finally coming in. Now, positions I'm carrying happen to be bearish. This is a trade that you want to keep very, very close eyes on, because what it comes down to, it's the consumer staples. And it has been unimpeded in any way, shape, or form. And we all have to recognize we've seen some pretty good volatility in 2019. You wouldn't know it, though, by looking at XLP. Another one where I'm also carrying bearish positions. Starbucks being used in a very similar fashion to XLP. They're defensive kind of plays. All of a sudden, okay, everybody seems to be going for the door in Starbucks. Once again, I am carrying a number of positions inside of Starbucks. I'll continue on. Costco, okay, which has been an impenetrable product, pretty much. Looks exactly like your consumer staples, looks a lot like Starbucks. Starting to come in the last couple of days. Once again, I am carrying bearish positions inside of none other than Costco. All right, moving along over here. Amazon. Here's one where I am not currently carrying positions. Okay. Nevertheless, as I mentioned a bit earlier, keep a close eye on it. Now listen, it has been range bound. It is still towards the upper end of that range, but some of the volume and the trade activity in there was a real standout in what amounted to a fairly quiet session inside of today's trade. And last, but definitely not least, kind of on my radar right now, has got to be the EEM, the Emerging Market ETF. After some of the negative news about China last night, the EEM, it's coming in but minimally so. Here's one, okay, where that has had just an unbelievable bounce back to the upside. If the bonds catch a little bit more of a bid, I would expect the emerging markets to really get hammered. Okay, this is still very advantageous. It's early on. Again, what I'm looking to occur in here, some more sell side activity, some more follow through, if you will, to some of today's activity. With that, again, we have a huge amount to kind of look forward to in the coming trading sessions. The last thing I'm going to really kind of leave you with is in the SPX, which is, as I say, lovingly, it is the mother of all products. Be aware, once again, how tight the expected move is throughout the course of this week. And I'm going to reiterate that again. The expected move, okay, this week is under about $42. Volatilities are still inherently low. Yet again, we are seeing some risk metrics kind of bid up, like the VVIX. Be mindful of that throughout the course of the week. Don't let the fact that the S&P's moved a whopping, $5 today lull you to sleep. Thanks, everybody, for joining us here at Theo Trade. Have a wonderful evening. Bye-bye.